Hello, I'm Neil Whelan, and welcome to the Wesleyan Podcast. This time out, Laura Weaver is talking to Aaron Prested, one of Wesleyan's specialist financial advisors looking after our dental customers. They'll be chatting about spring cleaning your finances, in particular, your allowances and contributions ahead of the new tax year starting in April. As always, this podcast is just for information purposes and shouldn't be taken as financial advice. If you do need more detailed information about what they talk about, I'll be back at the end to let you know how you can get in touch with us. But for now, let's hear from Aaron, and first up, Laura.
So how should dentists utilise their personal savings allowances to get the most benefit?
Yeah, one of the considerations that I'd certainly be looking at, Laura, is ISAs, their individual ISA allowances. So they're currently, those allowances are currently £20,000 per person. And that can be a mixture of cash ISAs, stocks and shares ISAs, innovative finance ISAs. If an individual is aged between 18 and 40, they could also invest into a lifetime ISA. They're able to save up to £4,000 in those up to age 50, and they'll qualify for a 25% bonus on that contribution. So in reality, Laura, if someone put £4,000 into a lifetime ISA, that 25% bonus is worth £1,000.
Oh, okay. So quite a big bonus then.
Yeah, and it could be used towards either retirement, or it can be used towards the purchase of a house.
Okay, so really good uses for that then in terms of like their financial future.
Absolutely, yeah, absolutely.
Okay, so in terms of what's happening in the landscape, what makes now especially important to be thinking about these kind of allowances?
I think in the background, we're kind of in a period of high inflation. You know, we've got rising energy prices. We're seeing interest rates start to rise, which will impact on borrowers. So those with mortgages, you've got rising food prices, and that does cause issues with those who hold money in cash. Often, if your funds are held in cash at present, even though I've mentioned kind of rates are starting to rise, they're still at kind of historic lows, Laura.
Yeah.
So you're in a position whereby you're getting very little by way of interest. It could be 0.5% on an instant access savings account. But if inflation runs at 5%, what that means in real terms is the value of your capital has been eroded by 4.5% in terms of what it can actually do for you in terms of what you could spend it on. So that's kind of where kind of cash holdings are really kind of disadvantaged when it comes to periods of high inflation. So taking advantage of allowances makes sense at this point in time.
Yeah, so inflation seems to be causing quite a big problem. It's a bit of a sort of stealth issue, isn't it, for people that like to save in savings accounts and have easy access to their money?
Absolutely. Sometimes that can be a comfort thing, and sometimes there's a rationale behind keeping money in cash. So for those who they've got a short-term objective, perhaps, Laura, so they might be going on holiday, it doesn't make sense to put that money into, let's say, stocks and shares, for example, because if they're looking to travel in 6 months' time, there's a real risk that if the market drops, you haven't got the capital to pay for that holiday. But over medium to kind of longer term timeframes, having money invested tends to give you a better opportunity for capital growth.
Okay.
And hopefully kind of counter the impact of things like inflation.
Okay, well, that's interesting. So in terms of pension contributions, how can that kind of support a dentist in terms of their financial planning?
Yeah, in terms of pensions, dentists probably tends to be kind of the most done topic as such, Laura. This is probably the one I get the most questions about.
Yeah.
Looking at kind of the current tax year, my view would be start to analyse how much you've paid into a pension, and that's quite straightforward for defined contribution pension schemes. So a defined contribution pension might be like a personal pension, Laura. So you'll make contributions to that scheme, you'll get government tax relief. It's quite straightforward to work out how much you've paid in, because it's if you paid £10,000 into the pension with the government tax relief, that would be £12,500. That would be then set against the annual allowance, which currently sits at £40,000 or 100% of UK relevant earnings, whichever figure is lower.
Okay.
So if I give you the example of a dentist, let's say, who has earnings of £60,000, if they've paid £12,500 into a pension, we can see that their allowance, their full allowance will be 40,000. They've paid in 12,500. They've got quite a bit of wriggle room with kind of further pension contributions. Where it gets complicated is for defined benefit schemes, and a defined benefit scheme, the best example is the NHS pension scheme. That is a defined benefit scheme, and how much you make or how much you pay in as contributions to that scheme, that isn't the figure that you would set against your annual allowance. So let's say you've made pension contributions of £8,000 over the course of the tax year.
Yeah.
Now that £8,000 isn't the figure which is set against the 40,000 annual allowance. The figure that is set against the 40,000 annual allowance is far more complicated, and it involves an actuarial calculation which goes on in the background, and it is in effect a calculation that determines how much growth has taken place within your pension.
Oh, okay.
So it's complex, which is why I would actually probably engage with someone sooner rather than later, just to see where we think you might be in the current tax year when it comes to your annual allowance.
Okay, so there's possibly quite a big risk for dentists then in terms of potentially breaching that kind of limit.
Yeah, and there's lots of moving parts, because dentists could be part of perhaps more than one scheme. So they might be part of the 1995 pension scheme and the 2015 pension scheme, which is quite a common one. They might have personal pensions that are going on in the background. They might you could have a dentist, for example, who is fully private.
Yeah.
And that dentist isn't making any contributions to the NHS pension scheme, but they have got a deferred scheme in the background, which is still accruing. That is still it's still using up some of their annual allowance over the course of a tax year. So they need to be mindful of personal pensions in and how much room they might have to make further contributions.
If we kind of move on to the next one then, so what happens if you don't use your capital gains tax exemption? Is there a risk that dentists might lose that?
Yeah, so the capital gains tax-free allowance is £12,300, and that, much like the ISA allowance, kind of runs from tax year to tax year. And just to explain kind of how capital gains tax works, it's a tax which is due on the profit which is realised from the sale of a chargeable asset. So if you bought shares, Laura, for example, at £50,000, and then you sold them at £100,000, you've made a gain of £50,000.
Okay.
So there would be tax due on that £50,000, and the tax that's due depends upon your tax status. What I mean by that is whether you're a basic rate taxpayer or a higher rate taxpayer, and it's something that's worth covering off with your accountant. But conversely, if you've made a loss, Laura, so perhaps if you've made a loss on an asset, that can be used to offset gains that you've made in other areas. In terms of kind of claiming for any loss, it must be included on your self-assessment tax return.
Okay, yeah, that makes sense. So is there anything that dentists need to think about in regards to sort of inheritance tax or annual gift allowances before the new financial year?
Yeah, so inheritance tax, there are kind of exemptions there or allowances there which can help perhaps kind of mitigate some of the inheritance tax issues. You are able to make a total of £3,000 of gifts per year that can be gifted, and you can carry forward kind of unused gifts for previous tax years as well. So if you never made a gift in tax year, we're looking at tax year 2021, you could carry forward that £3,000 gift and make a £6,000 gift in the current tax year. Often when it comes to inheritance tax, I mean, a married couple with their own main residence, their actual inheritance tax nil rate band might be as high as £1 million. So once you're over that limit, that £1 million limit, making gifts of kind of £3,000 here and £3,000 there doesn't really make much of a dent in the overall value of an estate. If I had I've come across situations where a client might have an estate worth, let's say, for example, £4 million.
Yeah.
Now, in that example, and I can kind of get really technical on this because the actual allowance for that individual, the inheritance tax nil rate band would be reduced right the way down to £650,000.
Oh, okay. Yeah.
So there would be a lot of potential tax at stake. I mean, the tax is levied at 40% on assets above that 650,000.
Yeah.
And the issue you tend to see actually kind of more often than not is if an estate was worth £4 million, all it takes is for the assets to be accruing at a rate of, let's say, 10%. You know, if you've got the stock markets going up, if you've got property prices rising, a 10% growth on a £4 million estate is £400,000 in that year.
Yeah.
And we're looking at gifts of £3,000. So these allowances, whilst they help, they don't kind of solve the full issue. But you are able to kind of make unlimited gifts of up to £250 per person to as many people as you want. So if you've got a big extended family, you could make gifts of £250 per person.
Yeah.
If you find that you've got disposable income, Laura, that's another option. So if you have an NHS pension, let's say a private pension as well, and that might deliver £4,000 a month of income. If your expenditure is £2,000, Laura, you've got £2,000 a month of disposable income there. And that £2,000 a month of disposable income could be gifted, and it's immediately outside of the estate as far as inheritance tax goes. So that's a route if you've got kind of spare income, kind of moving it outside of the estate.
That's interesting then, approaching it monthly rather than just kind of like a year in review. No, that's a really good idea. So in terms of anything else then you feel like we might not covered that dentists really need to consider at this point of the year to make the most out of their hard-earned money?
Yeah, so in terms of pensions, I've come across kind of situations where the dentist may be working, the dentist is working, but their partner might not be working. So their partner is still able to make contributions to a pension of up to £3,600 per year.
Yeah,
I think the net cost to the to that person would be £2,880 because you would get government tax relief to kind of bring it up to 3,600. And pensions, Laura, they're incredibly tax efficient due to the nature of that tax relief, because a £100 contribution would get a £20 will get £20 of tax relief. So in reality, what happens is you pay £100 in, but £120 is invested in that example. And if you're a higher rate taxpayer, Laura, you get a further £20 reduction in your tax bill if you're doing a self-assessment. So actually, it's kind of an £80 net cost for £120 of benefit. So the first thing I tend to look at with clients is, well, what have you used up in terms of your personal annual allowance for the current tax year, to see whether there's some wriggle room there to make pension contributions, being mindful of things like annual allowance and pension lifetime allowance as well. Okay,
that's a really interesting way to look at it. So there's kind of there's a lot of potential there for growth on their income.
Absolutely, yeah. You'll get, there's kind of very few areas where you'll get money for nothing, but the tax relief on pensions and probably the bonus on lifetime ISAs are two examples that I can kind of think of straight away where you'll get you'll get something back with regards to your contributions.
Okay, so it's definitely something that dentists need to kind of get onto then, just to try and make the most of this financial year.
Absolutely.
And that's our show for this week. Thank you to Aaron and Laura. If you're a dentist, or indeed anyone, who feels they could do with some financial advice, you can find out more about what we do and get in contact with us by going to wesleyan.co.uk, and also follow us on Twitter @Wesleyan, and search for us on Facebook, LinkedIn and Instagram. And if you haven't already, subscribe to this podcast and give us a like wherever you've downloaded it. But that's it for now. So until next time, thanks for listening.